Ladies and gentlemen, welcome back to the channel and welcome back to the first day that AMC stock is in the green in quite a while. AMC now up about 3.28%. Maybe we are finding a bottom here and maybe we can actually start to retrace to the upside. We're going to talk about a bullish case for AMC throughout the rest of this week because I think it needs to be said. This looks like it could be a triple bottom formation, which does typically lead to a big rally once that happens, guys. Now we are back to $5.05. This was the intraday low, the low of 2022 back here on November 9th. So I do think $5.05 is a critically important level where we are finding a little bit of resistance with AMC stock here right now. By the end of the day, that could change, ladies and gentlemen. This is an intraday update on AMC stock, and what's interesting about this is the cost to borrow rates are actually going insane today as well. Let's get into all the key information you need to know, none of the BS. So Bank of Japan shocks global markets with bond yield shift. This is what caused the pre-market move to the downside. This is what caused a lot of fear earlier in the trading day, right? It was because the Bank of Japan it's kind of like a nothing burger, but the markets freaked out about it a little bit. So we're going to read this key point right here and then move on from this because the markets are moving on as well. But this could be important later on, potentially throughout the day, potentially over the next couple of weeks. So we're going to get into it right now. The key points. The Bank of Japan caught markets off guard by tweaking its yield curve control policy to allow the yield on the 10-year Japanese government bond to move 50 basis points either side of its 0% target. In its policy statement, the BOJ said the move is intended to, quote, improve market functioning and encourage a smoother formation of the entire yield curve while maintaining accommodative financial conditions. And even like this video says right here from Citibank, absolutely nothing stunning about Bank of Japan yield tweak despite market reaction. And that was the thing. Pre-market, guys, last night futures, the Nasdaq was down over 1%. Japanese markets were down over 2% across the board, right? It's because it's pretty rare to see Japan shifting their policy, and potentially why they are doing this is because growth is slowing down and virtually all economists expect growth to be weaker in 2023. So this is something that could come back to spook the markets, but as of right now, as of today, the markets are definitely rebounding off of this news. If we take a look at the S&P 500, we are now in positive territory as well, sitting at 0.22% positive at about 380.85 for the SPY, the S&P 500 ETF. Now, I think one of the most important things, if not the most important thing, that will be happening today is going to be earnings from Nike and FedEx. If FedEx and Nike earnings are bad, that will be a hugely negative thing for the markets. If they miss expectations, not just their stocks would get clapped and just murdered, destroyed, but it would also destroy the markets because at this point, you know, earnings are expected to come down, but not on every company and not on every sector. From FedEx and Nike, these are supposed to be some of the stronger companies through all of this. That is why they have held up a lot better than a lot of other companies on the stock market. And if FedEx and Nike are bad, that is going to show the consumer is definitely slowing down much more than expectations. We already know that retail sales for the month of November were very bad. We're waiting on retail sales for the month of December. We'll see where those come out as, but that could be a precursor to what that number is going to be based off of FedEx and Nike earnings. So if these earnings are bad, I mean, there's nothing we can do tomorrow. It's going to be bad for the markets. It's going to be bad for AMC. Now, historically speaking, these earnings tend to be very positive. Nike, if you bet on Nike on earnings for it to fall, you've been disappointed many times. FedEx, I believe their last earnings, they did fall quite substantially. Let me just double check that before I go out on a limb and actually say that. But I do think they did drop quite a bit their last earnings. Yeah, they did drop 21.5% their last earnings. So it's not like it would be a super crazy thing. They do fall sometimes after earnings, but just depending on what they say will be very, very important. And if they get another leg down, it's going to be very bad for the markets. Now, let's take a look at the dollar and TLT for this intraday update, and then we'll get into everything AMC. So for the bonds are coming down again. That means yields are rising. That is a good thing in this market environment where the markets are more fearful of economic growth slowing down in 2022, putting us into a recession, rather than inflation staying higher for longer. So the fact that bond yields are actually rising today could be a very positive thing for the whole recession narrative. And TLT is down about 2% today, so that is a very, very big drop. Now, if we take a look at the dollar is down 0.72%. That is a very bullish factor for company earnings. That means global currencies are rising, the dollar falling. That means if you are Apple and you do business in China or across the world and you're taking in foreign currencies, when you convert that back to dollars, you are going to get more dollars for your foreign currency. So there you have it. That is a very bullish thing here on the day as well. Now, if we do go ahead and take a look at AMC is still up about 2.78%, $5.03 at the time of recording this video. If we take a look at the Ortex data, dude, the cost to borrow rates are going insane again. Cost to borrow average sitting at about 33%, cost to borrow max sitting at about 46%, and cost to borrow minimum at about 20%. Sorry you guys had to hear that. This thing is kicking my ass. Nonetheless, the borrow rates are going up sharply here today, in between 5 and 10% across the board. 46% for that cost to borrow max. That's a high number again, and it is because there's very few shares that are actually available to be traded, to be sold short, to be lended out. All of it. There's not too many shares available, and throughout the whole day today, you were seeing in between 0 and 15,000 shares. Most of the time, it's 0 to 1, 2, 9,000, and that one hour where we were at 15,000 shares. But by and large, there's not shares available to be sold short. Now, if we're looking at the live short interest of free float, that is sitting at 19.19%, up about a 0.5% here again today. Now we are sitting at 99 million shares that are sold short, indicating about 500,000 shares have been sold short here today. So very interesting. It looks like shorts continue to double down even when there is a lack of shares available. Now, for the day, we have seen nothing but calls so far. It says one order totaling $13,000, $13,230, but this order did just come in as well a couple minutes ago. That is worth about $22,000, and they are the January 19th, 2024 $8 call. That's been a very popular one, and the January 19th, 2024 $10 call as well. So you're at 100% positive order value. Yesterday, you've seen 22 orders totaling $1.05 million, positive order value of 31%. So by and large, things are looking pretty good here today, and you've just fallen so much in a very short amount of time. You've went from $8.50, close to that $9 target, just 2 weeks ago, 2 trading weeks ago. Now you're at $4.74 was the low today. It's no shocker that we are bouncing. Now, if we do get this triple bottom formation that does actually come to life, if we can get higher than $5.05 by the end of the day, that could spark potentially some big upside, depending how obviously FedEx and Nike earnings do in after hours. It could be exciting, and why I'm saying we could actually see a big rally this week if these earnings are good, a lot of it comes down to the option activity. So for this Friday, you're seeing about 23,000 calls that are now in the money. This is a lot different from the 400 contracts that we had just seen not too long ago, right? Yesterday, the day before that, you only had 400 calls that were in the money relative to a lot of calls that were out of the money. Now you're at 23,000. and you do have about 136,000 calls that are still out of the money. Now for the put side, in the money puts, sitting at about 19,000, out of the money puts at 33,000. You can see the big divergence here between calls and puts. Many more calls than puts for this week's option expiration. And when you tend to get those big skews to the bullish and the bearish side, you tend to rally, right? You tend to get a rally if you have 5 times more calls than you do have puts. So I think all of that, big indication of potentially what is to come this week. Obviously, no guarantees. I'm not a financial advisor, but what I will tell you is that we don't really have anything that will move the markets besides earnings from Nike and FedEx here today. You do have earnings from Micron as well, which could be important on Wednesday and after hours. Don't expect it to be nearly as important as FedEx and Nike, though. So depending how those earnings go, that will really set the tone and the trajectory, at least until Friday, in my personal opinion, where you do have personal income month over month, personal spending month over month, durable goods orders month over month for November, and the PCE index, the Fed's preferred measure of inflation, all of that coming out at 9:30 in the morning on Friday. So I think from now until Friday, if earnings are good, well, you could be setting up for a pretty sizable bounce, especially in stocks like AMC, guys. So there is all of that information. I think we covered a lot for this intraday update. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching. I will see you in the next one.